Everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals and commodities, ETFs that this guy follows. If you have any sort of questions on anything, check out finding-value.com. That's where I go into some of the trading sessions, which we just had a training session today. It's posted on the website if you guys want to see it. But if you have questions, you can ask me directly through these question and answer sessions that we have on the weekends. And this next one is on Sunday at 5 p.m. Mountain Standard Time. Let's dive in. Let's take a look and see what the markets are telling us today through the charts. So we're looking at the DXY first. That is where we're going to start, and we're getting a bounce in the DXY. Now, is this going to be a sustaining bounce? I'm not convinced yet. I think the momentum is still to the downside, and I'm looking at this from a bearish perspective. But I will say that we are towards the support level. That big white line going across there is a big support line in history. Lots of selling pressure around this area has occurred, which means it's going to act as a strong support resistance level. So you can see that we're trying and entering into that support level. We're getting a little bit of a bounce today, but the momentum is still undeniably to the downside. The way that I view this here is a flag pattern. We've come on down. This is a continuation pattern to the downside. And that's what I see from the patterns in the chart, that the momentum is still to the downside. There's no huge reversal candlestick, although today could be a reversal candlestick. A little bit of a bullish piercing candlestick is what I'm seeing. But we are underneath that resistance level, and we'll have to see what the bounce looks like. So we can go and we can look at yields as well. Yields will also tell us which direction the DXY is most likely to go. So we can go look at yields. The 2-year yield still, to me, looks like this wants to drop. What gives me that type of signal? Well, we've got a bearish engulfing here. We've got strong selling pressure all through here. And all of these bounces that we are getting are small green candlesticks. Think of them as flag patterns in a stair-stepping pattern lower downward, with large selling pressure or large yield moves to the downside. That's these guys all through here. So that pattern I recognize as a downtrend. And today we didn't really get a large bounce, no reversal candlestick, nothing like that. So yields look like to me that they can continue lower. The 10-year yield is also in a steep downtrend. The downtrend started here in this bearish engulfing. There's 3 of them in a row. Keep that in mind, because when you look at other charts, you're going to see these types of patterns where we could get topping patterns eventually towards the end of a bull market. And that's what we're looking for. Big bearish engulfing patterns or big wicks at the top. Those generally occur close to a top. So we're coming on down, and that downward movement is still intact. The 30-year is no different than the other 2-year and 10-year. We are at support. We are getting a little bit of support today, but the momentum is still undeniably to the downside, and we're looking to see what kind of bounce we could potentially get. We haven't gotten that bounce yet. PYX-TNX ratio, this is a squeeze up. You can see this thing kind of squeezing up. You can see the trend line coming on up. We've punched to the downside of this ratio, and we're squeezing up, and we have another bearish candlestick today. We can see a strong reversal here coming on up like it's struggling to go higher, and we have another larger down candlestick in the ratio. So what does this mean, and why does it matter? It means that technically we could probably drop to the downside. It means the yield curve could invert further than what we are today. So I know a lot of people think that we're going to go into a recession, it's baked in the cake, et cetera, et cetera. What I'm saying is maybe in the short term, we might still have a drop here. It looks to me like we're going to drop to the downside and the yield curve is going to invert further. What does that mean? It means that maybe crude oil is going to make a comeback and invert this curve further. Maybe we stay inverted for longer. Again, I don't know the future. I'm not here to be a genie in the bottle to give you three wishes of and grant you those three wishes of which way the direction will go. But to me, it looks like we still could stay inverted for longer. TLT bond prices continuing to move up. Today it was a down day, but momentum is up. That's what I meant by continuing to move up. The momentum is up, and we have a little bit of a down day, and it doesn't look like it's going to reverse yet. Momentum is still up. And then the 10-year curve here, this is measuring the 2 versus the 10. This does look like it could uninvert. So the 30-year and the 10-year did not invert. That was going to invert further, possibly on the long end of the curve. The shorter end did invert, where the 2-year went down a little bit more than the 10-year. Looking at a stronger dollar and yields that went up and the yield curve not uninverting but inverting, that's not a tailwind behind gold. So gold did go down $16 an ounce, and we're right at this kind of all-time high resistance level. We can even look back at other previous all-time highs where we tapped up against that level. I do think eventually this will work its way on up, but the path could be a little bit lower before going higher. We're up against resistance, and that resistance looks to be pretty strong. Silver down 1.59%. We're still up against that strong resistance line. And I think that silver could have a very big move in front of it at some point. I'm not going to say it's going to happen in 2 weeks or it's going to happen in approximately 4 months. I don't know, but I can say this. We're coming up, hitting resistance, hitting resistance, hitting resistance, hitting resistance. We come back down and we came back to a lower high. We're coming back up, hit resistance, hit resistance, hit resistance, hit resistance. I think we are close to punching through. Could it come back and cycle back down? It very well could. But to me, whenever you're hitting resistance this many times, it's just a matter of time before we break. So silver looks fantastic. Platinum continues to move higher. We're up $7 an ounce on platinum. Platinum is fantastic. My boy Platy, this thing's going to rip it. This will hopefully be one of my stronger returning areas over time. But platinum still looks fantastic. Palladium getting a little bit of selling pressure today. But again, guys, I think this is a bottoming pattern. Generally, what you do, if I were to just extend this out a little bit, so generally what occurs is you get these falling wedges. This is the falling wedge. You sometimes get a false breakout, and that's what the FBO is. It's a false breakout up above support. The support is this long-term level down here. We've broken back out, and we could get a return move before heading higher. So I think it looks fantastic. This here, I think, is short covering, and we're going to eventually work our way up slowly. I'm a bigger bull on platinum than I am on palladium. I think the deficits out in the future are going to impact platinum more than palladium. Palladium is currently in a deficit, and there's been some substitution going on. And my boy Platy is going to do, I think, very well. Not palladium, platinum. XAU to gold ratio, we're getting a little bit of a downward move for the gold and silver mining companies. You can see this here. It's more of a bearish candlestick this week. And pulling on back, we're above support. That support line is this big boy here going across. The lows continue to make and work its way on up. So everything's intact. We are coming to a critical level that we're trying to break this big downtrend line. That's what we got to do. We got to break it, guys. That's literally what we want to do. CRB index. I know oil was down a little bit today. Well, I guess a lot today. And we're coming up against this resistance line. So we'll see if we can punch through this resistance line on the short term. It is a falling wedge, this guy here. And sometimes when you get a false breakdown, they can slingshot back to the upside. So that's what we're seeing at this current time. And we very well even could go further to the downside. It looks like that is the case when we back out on the month. This is the weeklies. big selling pressure here and a weak bounce up against resistance. So it does look like we could head a little bit lower in the short term. There could be a slowdown, a little bit more of a slowdown in the market left before we unhook crude to the upside. CRB to S&P 500, it's holding in there steady. We're just kind of moving sideways here at the time. GDX down 2.5%, a little bit more selling pressure than the physical metal. GDXJ also down, but again, we're up above support of that trend line. We've broken out. Maybe we get a little bit of a return move in the short term. Again, guys, I'm not trading the short term here, but it does look a little bit weak on the downside. And SILJ down 3%, but again, we have broken out of this trend line. And a lot of the times you break out, you may get a return move, and then you move on up, or you can even move sideways. Remember the market conditions that these do well under. They do well under a yield curve uninverting. And right now, the yield curve looks like it wants to invert a little bit further. So that's what we've got. Crude oil down 3%. I know that I think they released some pretty big deficits in crude oil on Wednesday. Either way, we were down today, and we're back to that support level. There's the support level. We're right on top of that support level that I drew in here. This to me looks like a double bottom. You can see that I put the support level right through here. We had a lot of trading going through here. We came on up. There's the guy there, and then we broke out to the downside. So is there further downside? Could be. Could be. Longer term, we're up above support. And maybe we've got a little bit of shaking to do, some jumping on a trampoline is what I call it. Maybe we've got a little bit more of that to go on the right-hand side here. TTF gas down 6%. This to me looks like, we kind of pooped out to the downside. We do have warm weather, and that does impact the price of natural gas. So we are also underneath resistance across both trend lines. There's two trend lines, a horizontal and a trend line going up. We have come on to the lower side. The way that I view this is we're probably going to stay low even out maybe till spring and be down here basing out. And that's probably going to be a really good entry point for some natural gas companies. Nat gas in America up 4.3%, diverting from the TTF gas. Big bullish engulfing there. Doesn't look too bad. Maybe we can start to consolidate here and start to move on up if it decides to do that. XOP, yeah, me getting some selling pressure down 1.7%. Short-term wise, maybe we are just going to come back. We've got a breakout, and maybe we've got a return move left in this thing. It's possible. I'll leave that in there. Bigger picture view, though, guys. I think this looks fantastic. I am a huge bull on the longer term. This big inverted head and shoulders that we are ready to rip to the upside. OIH down 1.4%. It was down today, and looks like we're right on support. So we'll see if that holds tomorrow. We can also throw this guy. We can kind of run it across here. And there is a support level that goes through there. This is the bottom of it, extended outward. We popped on up, and maybe we get a little bit of a return move backwards to the bottom of the channel. Physical Uranium Trust, we're still in this rising wedge. And I don't see a ton of selling pressure up here. There's no big red, candlesticks that are massive where we're encountering massive selling pressure, at least not yet. Doesn't mean we can't go lower, but I'm not seeing the characteristics of big selling pressure. So again, I'm going to remain open. We'll see which way this thing goes. URA, this is a dividend day, so that's the big move lower there. URNM down, but we're getting buying pressure. That's what the wick on the bottom is. We're still above support. Still looks okay to continue sideways or higher. URNJ, another wick on the bottom, and that's usually a form of strength, not weakness, to get these little wicks on the bottom. What that means is that we've traded lower and people bought it back up throughout the day. Momentum came higher throughout the day. So that still looks good, and we're still above support. To me, it looks like we're just kind of flagging out here. We can throw another resistance line kind of at the top in this general area there. It looks like we're kind of bouncing between support and resistance. Pan up 1%. It's still looking all right. And on the bigger, longer term, it looks like it wants to go higher. Looks great for a move on up. COPX down 2.6%. Quite strong selling pressure there. It's not a reversal candlestick. We've got very strong buying pressure down here all over the place. And that was your foundation for a move higher. So I still think we're going up. I think the momentum's to the upside and still looks good. Lithium up 2.7%. That looks fantastic. Let's keep the momentum going. Let's break through this resistance line, which is the bottom trend line here, to get on moving. It looks good. REMX is the same thing. It looks good. We're trying to break back through this trend line there. And hopefully we can break back through it. Maybe this is just a false breakdown, which slingshots us up to higher levels. S&P 500 flat. I know we're up against resistance. I am curious to see what happens here. I'm curious to see. I'm not going to say anything. Let's just watch it. You know, is this the Batman pattern? What's that? Batman pattern is potential top. And it doesn't have to top right here. It could go a little higher. It could be offset to some degree, but I am highly interested to see what occurs here. NASDAQ, same thing. I'm highly interested to see what occurs here. Is that the Batman pattern? We'll find out over the next couple of weeks. KRE continues to move higher. This looks very strong, and I continue to be a bull on the regional banking ETF. This, to me, looks like a bottoming double bottom pattern, a breakout to the upside, and looks great to go higher. Emerging markets also look very good to go higher. Weaker yields, weaker dollar, generally speaking, but this, I think, will eventually turn and move on up. XHB continuing to move on. Well, we're down a little bit, but the momentum looks still good. And we're at all-time highs for XHB. Looks fantastic. Moo looks like it's trying to put in a bottom and start to turn here. So I would expect this to continue higher. And I don't see too much selling pressure over here in this right-hand side. Copper, a little bit of selling pressure, 1.16. But again, momentum's upward. We've broken through the downtrend line. This guy here, this was a squeeze. And then I think we're going to break to the upside. And you can see the trend line as we come in and squeeze up. I know some capacity has come offline, and I think that's one of the reasons that it will break to the upside, not the downside. Iron ore up 1.7% today. I think that this looks fantastic for a move way higher in iron ore and steel. Now, this is iron ore. I know steel is made from iron ore, but this to me looks fantastic. I think we got a lot of upside. A lot of investment potential in iron ore. Aluminum down a little bit today, but we had a monster move here. This to me looks like short covering here. A little bloody nose. I think we will continue higher in aluminum, and eventually this is going to work its way on up. I'm not saying it's going to go straight higher. You're going to get your consolidations or, whatever it is, but it looks good to go on up. Baltic Dry Index continues higher today, 0.34%. I can barely see that. Let's go to the weeklies here, but I think we're going to continue higher. Why? Because I think coal's trying to bottom. I think iron ore is going higher, and those are major components of shipping. Dry bulk shipping or the Baltic Dry Index, I think will eventually turn around here. Newcastle coal futures looks good. It didn't go anywhere today. It was 100% flat. Bullish engulfing, higher move up, and then you see a squeezing, a falling wedge ready to break on higher. So I think we're going to go higher in Newcastle coal futures. And it'll eventually base out here probably with natural gas. Bitcoin was lower today, down 1.8%. We're still on support. And then Ethereum was also down, but that's just a bloody nose. That still looks good to go higher in both of those cases at this time. If we get a big blowout down candlestick, then I'll change my mind when that occurs. It still looks good. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. You can see the training session that we had today. It is posted up as I speak. That is on the website if you want to view it and you're a member. And we will probably hold another training session in the future. That was really focused on the market conditions, portfolio position sizing, a little bit on how to pick companies, but I think we need to dive deeper into how I pick my companies. That training session was 3 hours long. And I think we can dedicate a lot more time to how I choose companies, risk, reward, probability of success, all of those things. And that is a key component to position sizing, a key component to a person's returns, and the potential risk that they are taking to do it. One may look at the final outcome of something. The final outcome of something you could compare two things, and one says, oh, well, this guy was up 45% versus 40%. But that may not be the case every single year. This is a combination of good returns over long periods of time. And in order to maximize good returns over a long period of time, you have to have a good strategy and you want to minimize risk, increase the probability of success on a constant basis. Just because someone has a blowout year doesn't mean that you can do it consistently. The big returns occur when you can do something consistently and you get very good returns consistently. So that's my goal, is to consistently beat the market with very good returns while also simultaneously trying to push risk down. So we'll probably have another training session out in the future. I'll have to figure out the date for that, where we really start to dive into the companies themselves and how to play. In my viewpoints, and again, I'm not going to get all this completely right. My viewpoint might be jaded to some side or some degree, but I really think we should focus in on that. And that is what is giving me the returns over these past years, is focusing a lot of my efforts, not on getting the big trend right, because I think we've got the big trend right now. It's how do you play the big trend? And that's very, very important to get right. So we can dive into each sector. I can give my opinions on each sector. Not saying that I know everything about each of these sectors. I'm kind of a generalist investor looking for sectors to outperform. And these sectors light up with the ratios. They say, oh, this is a good potential area. And then you have to dive in to the companies. And then you have to figure out, do you choose a larger company, a mid-cap company, a smaller company, et cetera, et cetera? And what are the risks with them? Are the smaller ones actually going to give you leverage? That's what you have to ask. And there's a reasoning, logic process behind all of it. All right, guys, that's what I've got for today. We'll catch you later. This is Finding Value.